Many traders think their inverse fair value gaps do not work. They're just looking for the wrong ones. If you've ever seen price tag an IFVG perfectly, just for it to reverse immediately and stop you out, that wasn't just bad luck. That was designed to trap retail traders like you and me. And today I'm going to show you exactly why some IFVGs react cleanly and others are designed to trap you. Most traders treat IFVGs like magic levels. Price touches it, traders enter, and then they hope it continues. But IFVGs don't work in just isolation. They're confirmation tools, not entry signals by themselves. An IFVG is only good as the context it forms in, the timing it appears in, and the structure surrounding it. If you continue to ignore those three, you'll keep trading IFVGs that were never meant to hold. Here's the key question you should ask yourself before every IFVG trade. Who is this IFVG benefit? Clean reaction IFVGs usually form after displacement and not during chop. And they usually align with higher time frame bias. And usually liquidity has also already been taken out. Trap IFVGs usually form inside low volume ranges right before major session opens or news events, or against higher time frame bias or flow. If the market hasn't taken something first, why would it respect your level? Timing also matters more than most people can admit. The most common IFV traps can happen early in the session, during lunch hours, or when traders are impatient and forcing trades. A real IFVG reaction usually happens after the market shows intent, not before. If you're entering just because the price touched the imbalance, you're trading on hope, not structure. This is where most traders lose. Before you trade an IFVG, you should ask yourself, did structure break in my direction? Or am I forcing the move? A reacting IFVG supports structure, a trapping IFVG fights it. So let me put it all together for you. IFVGs that react cleanly come after liquidity is taken, align with higher time frame direction, and support a structural shift. IFVGs that trap you, form and chop, appear before confirmation, and go against structure. Now I'm going to provide a clean example of what an IFVG setup would look like from my end using the RISI model. So looking into the higher time frame, we have a bearish bias on the day, as we have traded into a bearish fair value gap on the hourly and respected to it. From there, I drop to the 5-minute time frame and wait for the New York Open. From there, I wait for the 15-minute orb to form during the first 15 minutes of the New York Open. I then wait for a close outside of the orb with the 5-minute candle. Then I drop to the 1-minute time frame. I wait for a pullback to the orb range. I do this by marking the swing low and the orb low. From here, I wait for an inverse fair value gap to form below the 50% range. From there, I wait for the IFVG below the 50% range to form, and then I take my entry to target the previous lows. If you want to see real chart breakdowns, where I mark which IFVGs I ignore and which ones I actually trade, I walk through that step by step inside our Discord. Not signals, just process, execution, and context. The stuff that actually makes traders consistent. The link is in the description. Thanks for watching, and I'll see y'all in the next video.